The escalating trade war, especially over electric vehicles, and new United States tariffs on the Japanese auto industry are prompting Tokyo to respond in different ways.
And Donald Trump seems to know what he's doing because Canada and others have caved.
He said this is a market that is just blatantly sick and tired of the back and forth on trade policy. And he said it feels as though the administration...
Second day in a row, the Dow Jones down now. Take a look at this. You see the Dow is way down.
The global economy is at a turning point. Japan has just made a shocking financial move that could shake the foundations of U.S. economic stability. In an unexpected decision, Japan is offloading massive amounts of U.S. Treasury bonds. Why is Tokyo making this move now? Is it a strategic warning to Washington? And what does it mean for the global financial system? Let's dive into the details. Japan cuts U.S. bonds, a clear warning to Washington. For decades, Japan has been one of America's largest creditors, holding hundreds of billions in U.S. Treasury bonds. This financial relationship has been instrumental in stabilizing the U.S. economy and supporting the dollar. However, recent reports indicate that Japan has significantly reduced its holdings, selling off tens of billions of dollars in Treasury securities over the past few months. This move raises serious concerns. What's driving Japan's decision? The answer likely lies in escalating trade tensions, particularly U.S. tariffs on Japanese electric vehicles. Washington has imposed hefty tariffs on imported EVs, affecting industry giants like Toyota, Honda, and Nissan. Tokyo is not taking this lightly. In response, Japan appears to be using its economic leverage, cutting U.S. bond purchases to send a strong message. Protectionist policies come at a price. U.S. pushes EV industry, Japan strikes back. To understand the broader implications, we need to examine the U.S. strategy. Washington is aggressively promoting its domestic EV industry to compete with China and Europe. American automakers including Tesla, General Motors, and Ford are receiving substantial government support, while imported EVs face steep tariffs. But why is Japan feeling the heat? Because Japanese automakers have long been leaders in electric vehicle and hybrid technology. Toyota revolutionized hybrids with the Prius, Nissan spearheaded mass-market EVs with the Leaf, and Honda is rapidly expanding its electric lineup. Japan views these tariffs as a direct attack on its competitive edge, prompting its decision to retaliate financially. By reducing U.S. bond holdings, Tokyo is signaling that if Washington continues on this path, Japan will withdraw its financial support from the U.S. economy. The big question now, how long can the U.S. withstand this pressure? Is Japan moving away from the U.S. dollar? Another critical factor behind Japan's sell-off is the global shift away from dollar dependency. The international financial landscape is changing rapidly. China is reducing its dollar reserves and promoting the yuan. Russia has already cut its U.S. bond holdings in response to sanctions. Other Asian economies, including South Korea and India, are diversifying their foreign assets. Now, Japan appears to be following suit. Tokyo may be redirecting its capital toward Asian markets, strengthening its financial ties with China, South Korea, and ASEAN nations. If this trend continues, it could accelerate the decline of U.S. dollar dominance. Could this be the start of a major economic shift? If Japan persists in selling U.S. bonds, how will Washington respond? Can the U.S. afford to ignore this warning? A worst-case scenario could include a decline in the dollar's value, increasing the cost of imports and fueling inflation, higher U.S. bond interest rates, raising borrowing costs for the government, and global financial instability, triggering a chain reaction in markets worldwide. The U.S. now faces two high-stakes choices: compromise with Japan, ease EV tariffs to maintain financial stability, or continue the confrontation, accept financial and trade risks in pursuit of domestic industry growth. Both paths come with significant consequences. What will Washington's next move be? This could mark a turning point in economic history. Stay tuned for further developments. Canada's strategic shift, breaking away from U.S. dependence. Meanwhile, the U.S. isn't just facing economic tensions with Japan. Canada is also reassessing its strategic and economic ties. The 25% tariff on steel and 10% tariff on aluminum imposed by Washington inflicted heavy damage on Canada's industries, costing the economy approximately $2.5 billion annually. But instead of backing down, Canada hit back with retaliatory tariffs on U.S. goods, including whiskey and steel products. With U.S. trade policies becoming increasingly unpredictable, Canada is actively forging new international alliances. In a major move, Canada recently signed a $6 billion defense deal with Australia to acquire advanced JRO radar systems. This technology will enhance Canada's Arctic surveillance capabilities, an area of growing strategic importance due to climate change and increased military activity by Russia. But why turn to Australia? The JRO radar system can detect airborne threats up to 3,000 kilometers away, allowing Canada to monitor its vast and remote Arctic territory without relying on U.S. systems. This marks a significant shift in Canada's defense strategy, reducing its dependence on the U.S. and seeking more reliable international partnerships. As tensions with Washington mount, Canada has recognized the need to diversify both its trade and defense strategies. In addition to its Australian partnership, Canada has also signed major defense and trade agreements with the European Union and Southeast Asia, totaling $7 billion in investments since 2023. The Arctic, a critical battleground. Canada's Arctic region is becoming increasingly significant, not just for its natural resources, but also as a potential flashpoint for geopolitical conflicts, particularly with Russia. As global interest in the Arctic's untapped resources and new shipping routes grows, Canada is stepping up its defense capabilities to protect its sovereignty. In the coming years, strengthening Arctic surveillance will be a top priority for Canada. With climate change accelerating resource competition and global influence in the region, Canada must ensure it is equipped to safeguard its interests. Enhanced defense infrastructure and strategic international partnerships will be crucial in maintaining stability and deterring adversaries. The defense agreement with Australia is more than just a military contract. It's a clear signal that Canada is preparing for a future where reliance on the United States is no longer the only option. The world is shifting, and both Japan and Canada are making bold moves to secure their economic and strategic independence. The question remains, how will the United States respond? Stay with us as we track these unfolding events. The financial storm market collapse and policy fallout. The stock market is experiencing unprecedented turbulence, with losses mounting to a staggering $5 trillion in just 3 weeks. Prices are soaring, wages remain stagnant, and the economy is on a roller coaster. Yet some continue to insist that this is the greatest economic era in history. But is it really? Tonight, Bill Maher breaks it all down. The policies, the promises, and the reality. Who actually benefited from Trump's economic strategies, and what were the true costs? Maher doesn't hold back, calling Trump a master illusionist, treating the U.S. economy just as he did his businesses. And history doesn't paint a flattering picture. Trump Airlines failed. Trump Steaks, a joke. Trump University, shut down for fraud. Trump Casinos, bankrupt 6 times, a casino losing money. That's like failing a breathalyzer at an oxygen bar. And yet, Trump's economic approach followed the same reckless pattern. National debt skyrocketed by $7.8 trillion in just 4 years. Market volatility surged, shaking investor confidence. Workers saw no real income growth despite promises of prosperity. Trump repeatedly called it the greatest economy ever, but for everyday Americans it felt more like survival mode. Trump's 2017 tax cuts were marketed as a boon for the middle class. The reality? 83% of the benefits went to the top 1%. Corporate tax rates were slashed from 35% to 21%. Companies reinvested their tax savings into stock buybacks, not wages. Billionaires got richer, while ordinary Americans saw minimal change. By 2027, middle-class Americans will actually pay more in taxes. That's right, more. And while Americans struggle with rising costs, the ultra-wealthy continue to thrive. Trump claimed his tariff war would protect American jobs. Instead, it became a self-inflicted economic disaster. Manufacturing jobs declined instead of increasing. Farmers lost billions as China cut imports of U.S. goods. Businesses paid higher costs, forcing them to raise prices. Maher sums it up perfectly. Trump's trade war was like setting your own house on fire and calling it a heating strategy. Trump once proudly stated, "I like reading as little as possible. I don't need 200-page reports on something that can be handled on 1 page." That philosophy shaped his economic decisions, making him the ideal president for a nation perpetually glued to its phone, but policies built on instinct rather than analysis come at a cost. GDP growth was just 2.3% lower than Obama's 2.9%. Stock market losses hit $5 trillion in just 3 weeks. National debt ballooned from $19.9 trillion to $27.7 trillion. Yet, Trump kept repeating, it was perfect, it was amazing, it was the best. But if an economy only benefits billionaires and hedge fund managers, can it really be called the best? Beyond the economy, another battle is raging, one that could redefine the balance of power in America. The Trump administration is facing allegations of violating a federal court ruling, sparking an unprecedented legal showdown over presidential authority. Federal courts halted deportations. The Trump administration ignored the ruling. On March 5th, a federal court ruled that Trump had no legal grounds to invoke emergency powers for mass deportations. The ruling mandated an immediate halt to deportation flights. But hours later, at least 3 planes still took off. Defying a federal court order is virtually unprecedented. This raises a crucial question. Can an entire government override the judiciary without consequences? Instead of complying, Trump escalated the situation by publicly attacking the federal judge and calling for impeachment. But is that even possible? Judges can only be impeached for misconduct or abuse of power. No judge has ever been removed simply for issuing an unfavorable ruling. This raises concerns over the independence of the judiciary. If Trump succeeds, will the courts remain a check on power, or will they become a political tool? Under intense political pressure, Supreme Court Chief Justice John Roberts issued a rare and direct statement. Impeachment cannot be used as a weapon against judicial rulings that the administration disagrees with. This statement is historic. Over 200 years, the Supreme Court has rarely intervened so directly in political disputes. It is a stark warning to the Trump administration. The coming months will decide whether the courts remain independent or become extensions of political power. Will the Supreme Court intervene again? Can Trump rewrite the rules? The legal war is just beginning. President Trump is threatening to impose a 200% tariff on European wines, cognac, and champagne. This move could devastate the EU's wine industry, which exported $13.1 billion worth of alcoholic beverages to the US in 2023. France, Italy, and Spain stand to lose the most. If the tariff goes into effect, imported wine prices would double, pushing European wines out of the market. US wine producers could expand their market share. French and Italian wines would face massive revenue losses. European wine producers are already sounding the alarm. We may have to stop exporting wines to the US altogether, warns a French vintner. Senior EU officials have declared that Europe will not back down. They argue that Trump's policies unfairly target European industries and threaten transatlantic trade relations. While European wines may suffer, American wineries could benefit, especially those in California and Texas. If the EU refuses to yield, U.S. producers could expand into European markets by leveraging potential tariff reductions on domestic wines. The U.S.-EU trade war is reaching an unprecedented level. Will the EU retaliate? Could this reshape the global wine market? Stay tuned. The next developments could bring unexpected consequences.
In news coming in from the defense sector, Canada is reconsidering America-built F-35 purchase. This is big news. Remember, mulling over talks with the rival aircraft makers as well. The decisions come while there are clearly tensions between US and Canada.
Canada is facing a historic decision. Cancel the $13 billion USD F-35 contract and choose a European partner. So, what is driving this bold move by the country? Since 2017, when Donald Trump started implementing protectionist trade policies, tensions began to form. One of the biggest shocks was the U.S. imposing tariffs on steel, aluminum, and agricultural products from Canada. These tariffs caused severe difficulties for Canada's industries. Specifically, Canada could not ignore the trade barriers introduced by the Trump administration, such as requirements on agricultural products or restrictions on steel exports. Furthermore, these decisions were not just economic losses, but also increased Canada's dependency on a single country, the US. This forced the Canadian government to ask a big question. Can we continue to rely on such an unfair partner when we could find other, more reliable partners?
Canada has reached an agreement to acquire a fleet of 88 new F-35 fighter jets. Defense Minister Anita Anand spoke about the $19 billion deal this past hour. She said it's the largest investment in the Royal Canadian Air Force in 30 years, and that this acquisition will create many economic benefits for Canada.
This is a turning point decision. Signed in 2023, the contract to purchase 88 F-35s from the U.S. was a key part of Canada's strategy to modernize its air force. However, the recent trade tensions have forced Ottawa to reconsider this agreement. The $13 billion USD F-35 deal is not just a typical arms procurement, but also a symbol of the cooperation between the two nations. But in the current context, Is it still reasonable for Canada to continue working with the US when Trump's tariffs and trade decisions are increasingly pressuring Canada's economy? With the F-35 primarily produced in the US, Canada faces a big question. Should they continue to depend on a country with such strong protectionist policies or seek alternative options from Europe? The US, of course, is not happy with this news. They have continuously emphasized the importance of defense cooperation between the two nations, especially with the F-35, which is the US fifth-generation fighter jet. Washington reacted strongly, stating that Canada's decision to cancel the contract could damage the special relationship between the two nations. Canceling the F-35 deal not only affects the defense relationship between Canada and the US, but also has far-reaching effects on various industries and the Canadian public's reaction to US trade policies. Specifically, this decision could alter the structure of Canada's defense, agricultural, and steel industries. The US tariff policies, especially the tariffs on steel, aluminum, and agricultural products from Canada, have caused significant damage to these industries. Canada, especially provinces like Ontario and Quebec, relies heavily on steel and aluminum exports to the US. And Trump's decisions have put businesses in a difficult position. Canadian farmers have also been heavily impacted by the US imposing tariffs on agricultural products like milk and beef. This policy has not only reduced profits in these industries, but also created economic instability in Canada, as businesses face rising costs and the loss of export markets. A large portion of the Canadian public has expressed support for shifting towards other partners, particularly in Europe. They believe that if the US continues to impose unfair tariffs, seeking alternative partners is essential to ensure the nation's independence and sustainable economic growth. Canada not only wants to maintain its relationship with the US, but also wants to assert that they can stand on their own and do not need to depend on another country. Stay tuned and keep watching, because the upcoming developments will leave you unable to look away. Will Canada choose to change direction or continue to stay tied to the US? Canada breaking away from the US? Europe becoming the new partner? In 2025, trade between Canada and the EU has surged by over 50% in just 6 years, while trade relations with the US have hit rock bottom for the first time in decades. Canada's Prime Minister has not chosen Washington as his first official visit. Instead, he went straight to Europe. Is this the moment Canada finally steps away from America's influence? Trade war. The US slaps Canada with tariffs. Once one of the strongest trade relationships in the world, Canada and the US are now locked in a trade war, and it all started with Washington's aggressive tariff policies in 2025. February 1st, 2025. The US imposed a 25% tariff on most Canadian imports. March 11th, 2025. The US doubled tariffs on Canadian steel and aluminum to a staggering 50%, sending shockwaves through global metal markets. For Canada, it was an economic nightmare. But Ottawa wasn't about to sit idly by. March 12th, 2025, Canada strikes back, announcing a 25% retaliatory tariff on $21 billion worth of American goods. And this time, it wasn't just symbolic. Canada hit back where it hurts, targeting steel and aluminum, crippling US exports, consumer goods, from processed foods to household items. High-tech products, a massive industry between the two nations. For the first time in modern history, Canada is showing that it no longer relies on the US for economic survival. And this is where things get even more interesting. Europe, Canada's new strategic partner. In a shocking move, Canadian Prime Minister Mark Carney skipped Washington altogether in his first official trip and went straight to France and the UK. Why? The CETA trade deal, Canada-EU trade agreement, has boosted Canada-EU trade by over 50% since 2017. The EU is now Canada's third largest trade partner, only behind the US and China. Canadian exports to the EU have soared 46.4% since 2016, giving Canada more options than ever before. Mark Carney himself made it crystal clear: Canada is the most European nation outside of Europe. And it's not just about trade. Canada's pivot to Europe is also about military power. Canada joins Europe's military alliance. A shift in global power? Canada isn't just looking to Europe for economic strength. It's also making big moves in the military sphere. Some major developments. Canada joins the EU's PESCO military project, allowing faster troop movements across Europe. Canada leads NATO forces in Latvia, solidifying its role in defending Europe from external threats. Canada expands intelligence sharing with the UK, boosting cybersecurity and economic warfare defenses.
Thanks for watching. Share your thoughts in the comments below, and don't forget to like and subscribe now.